Yesterday, the euro first gained value in the Asian session, but then came back under pressure in the European session on downbeat statistics on eurozone consumer confidence for January. Expectations of a swift rate cutting cycle from the European Central Bank and strong US data also dampened demand for riskier assets. Despite a subsequent rebound, the situation remains rather disappointing for euro bulls. Houthi attacks on Red Sea shipping, disrupting the global movement of goods through the key trade route, as well as geopolitical tensions heightened by the Middle East conflict, posing a serious threat to the world economy, also weighed on riskier assets. As for the British currency, the situation was the same. Sterling hit a new one-week high, but then suffered a steep drop. At the moment, buyers are trying to pair yesterday's losses. Today's macroeconomic calendar includes a batch of flash estimates for manufacturing and services activity in the euro area and its member states such as France and Germany. Business activity is projected to contract in January. If data disappoints traders, the euro will extend weakness and hit fresh one-month lows. The UK is also set to report flash PMI figures. The services PMI is forecast to remain above the 50-point threshold, while manufacturing activity is likely to stay weak. If the manufacturing PMI sinks more than expected, the pound sterling will most likely keep losing value. Similar statistics will be released by the United States. Likewise, its manufacturing PMI remains below the mark, indicating contraction in the sector. U.S. services activity is showing signs of a recovery. If U.S. data turns out to be gloomy, the greenback will come under pressure. However, given instability around the globe, this will hardly help risky assets regain lost ground. And now let's move on to technical analysis. According to the 1-hour chart, the euro-dollar pair is trading above the strong support level of 1.0852. Its false breakout will create a buy signal, driving the euro up to 1.0887. If the price breaks through this level and tests it from the top down, the euro will extend gains to 1.0916 and pave the way for further gains towards 1.0940 and probably 1.0966. At these levels, I recommend going short on a rebound to catch an intraday correction of 20-25 pips. Short positions at 1.0916, the upper boundary of the sideways range, and 1.0887 can be considered only amid a false breakout. Alternatively, if PMI figures are dismal and the price breaks through and fixes below 1.0852, a sell signal will be generated. In this case, the euro will dip to 1.0823. If the price edges lower, it would be a wise decision to go long on a rebound at the levels of 1.0782 and 1.0744, counting on an intraday correction of 30-35 pips. Much will depend on US statistics. Speaking on the British pound, in the event of upbeat statistics on activity in the UK manufacturing and services sectors, traders are recommended to go short amid a false breakout at 1.2716 or 1.2744. Short positions on a rebound can be opened at 1.2765 and 1.2783 with a view to catching an intraday correction 25-30 pip move. If UK data is grim, bears are expected to drag sterling down to 1.2678. If the price breaks through this level and tests it from the bottom up, the market will face a sell-off with the British currency sliding to 1.2649 and 1.2623. In case of a strong US data, sterling could dive to 1.2598 this month's low. Going long at 1.2678 and 1.2649 will be relevant amid a false breakout. At the level of 1.2643, it will be possible to open long positions on a rebound in the hope of an intraday correction of 20-25 pips. Best of luck!